Did you know that star investor Cathie Wood is once again buying a lot of Tesla shares? Wood has always been vocal about her bullishness and Tesla, which is why this move did not come as much of a surprise to her followers. You probably would not want to miss this. Cathie Wood, founder, CEO, and CIO of ARK Invest, remains strongly bullish on Tesla, even though the electric vehicle manufacturer has lowered its outlook for deliveries this year. In fact, Wood bought more Tesla shares as the stock tumbled after the company reported what experts perceive as lackluster third-quarter sales and said it will miss broad annual growth targets for the year. Wood's flagship fund, ARK Innovation ETF, bought 66,190 shares in Elon Musk's company, making her firm's second purchase in the EV maker this month. The fund bought a tranche after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release. Basically, Wood bought another 66,190 shares of the EV company on top of the over 132,000 she bought earlier this month. Tesla is the largest holding in her flagship ARK Innovation ETF that's down more than 55% for the year. Wood's latest buy came after the stock fell following Tesla's Q3 report. Some analysts focused on the management's admission during the recent Q3 earnings call that it expects to come up short of the 50% growth goal for 2022 vehicle deliveries versus last year. Still, Tesla projects it will meet that goal for vehicle production. The difference will be due to shipping bottlenecks the company has been experiencing. In Q3, Tesla produced 22,000 more vehicles than it delivered due to those logistics issues. But those cars have buyers and aren't just going to inventory. Whether customers take ownership in one quarterly period versus another shouldn't matter to long-term investors. And it's not just production that is growing at a fast rate. Total revenue grew 56% year over year in Q3, and net income more than doubled. Another point of concern for some investors is how Tesla's profit margins will hold up as competitors start to enter the market en masse. Automotive gross margin dropped 258 basis points year over year. That's not overly surprising, as supply chain constraints and rising material and labor costs increase expenses for companies in the automotive sector. However, Tesla's automotive gross margin held steady at 27.9% versus the prior quarter. That implies that the company is making up for added expenses. Although Tesla has raised prices on its products, investors should take it as a good sign that those price hikes are helping and are also not sapping demand. For the long term, there aren't many who are as bullish on Tesla as Cathie Wood. She expects the stock to be worth more than $1,500 by 2026. Currently, it's trading not even at 20% of that valuation. Nonetheless, that aggressive price objective does sound in tune with one other prominent name, and that's Elon Musk himself. In fact, on the recent earnings call, Tesla CEO Elon Musk made a rather bold statement that his company could be worth more than Apple Inc. and Saudi Aramco combined. For reference, Apple's market cap is around $2.3 trillion, while Saudi Aramco's is around $2 trillion. That means Tesla CEO Elon Musk sees Tesla to be worth around $5 trillion. Simply put, Cathie Wood remains more bullish than ever on Tesla stock. Wood, who is a huge proponent of innovation, continuously shows her support for Tesla and its forthcoming innovative projects. Wood has made a name for herself by investing in disruptive innovation stocks. Implementing an iterative process that combines top-down and bottom-up research, ARK Investment seeks to invest in companies that may benefit from cross-section innovations like artificial intelligence, robotics, energy storage, DNA sequencing, and blockchain technology. Tesla fits the bill as the company has disrupted the automotive space with its innovative EVs and self-driving technology. Wood has long been a fan of the company, which she said in her third-quarter letter was a top performer. She also discussed how companies focused on disruptive innovation have the potential to surprise the upside with considerable exponential growth trajectories. Traditional auto analysts deemed Tesla as doomed to failure. They did not understand that Tesla was a robotics, energy storage, and artificial intelligence company, not an auto company. Wood wrote. However, Tesla critics pointed out that the company has a limited product lineup that hasn't been updated for years. Still, the electric semi-truck will begin deliveries on December 1st to its first customer, PepsiCo, and Tesla CEO Elon Musk himself said that he will personally be there. The much-anticipated Cybertruck is also on the final lap, according to CEO Elon Musk, and should begin deliveries next year. Also, Tesla is expected to introduce a lower-priced EV soon that will expand its product line of passenger vehicles too. Musk also told investors the company is working as quickly as possible to increase battery production capacity. Its energy division also includes battery storage and solar rooftops and has more demand than it can supply. Sales from that division represented 5% of total revenue in Q3 as its energy storage deployments jumped 62% year over year. All of that should result in many years of growth coming from different places for Tesla. Some investors may be concerned about the current state of the economy, but Musk called Tesla's business recession resilient due to the global momentum transitioning to electric vehicles. Moreover, in a recent interview with Yahoo Finance, Cathie Wood shared that it is interesting to see that the gasoline demand in the US this summer dropped to levels that have not been seen since 1997. That's real demand destruction, and it couldn't have happened, we do not believe, without electric vehicles at the margin taking huge shares from traditional automakers, says Wood. That said, Wood believes that concerns should be directed at the traditional auto industry instead of the fast-emerging EV industry. We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles, explained Wood. According to Wood, there are a lot of innovations in the auto industry that put the traditional auto industry, and consequently traditional automakers, in harm's way. Wood pointed to Tesla's autonomous taxi platform as an example of such innovative change. Although many put their trust in Wood's opinions, others don't trust her easily. However, Cathie Wood has more than 40 years of investment experience under her belt, but became better known on a wider scale in 2020. Her ARK Innovation Fund returned almost 150% that year, catapulting her into a level of notoriety she hadn't yet experienced. In the past 5 years, the ARK Innovation Fund has returned about 45% annually. These numbers have turned Wood into something of a star in the investment space, especially when it comes to technology and innovation. Her asset management firm ARK Invest is known for its bets on technology and innovation considered disruptive. ARK's fund offerings include investments in robotics, genomics, artificial intelligence, blockchain technology, and clean energy. Wood is also known for sometimes making big claims about the future, and she insists that electric vehicle maker Tesla is still an undervalued company. Wood predicts that Tesla will be worth $3 trillion at some point. Cathie Wood, and therefore ARK Invest, focus on thematic investment strategies. A thematic approach to investing focuses on overarching long-term trends. Rather than looking specifically at sectors and companies or chasing short-term trends, thematic investing looks for disruptors that are likely to impact what the world could evolve into. Mostly, a thematic strategy tries to identify what could change the world, even if the underlying technology isn't fully developed. This explains Wood's bullishness on Tesla. As a result, if a technology or disruption appears to be on the verge of a breakthrough, or if there are advancements in news around a specific related company, there could be short-term spikes in the price of a company or a fund. Many of Wood's stock picks and what she includes in ARK's funds include companies that are researching and implementing various cutting-edge technologies and potential solutions, including artificial intelligence, DNA sequencing, genomics, robotics, energy storage, blockchain technology, autonomous technology, and/or 3D printing. Many of these fit Tesla, which is probably why Wood is very optimistic about the company and its potential. Overall, Cathie Wood may do a lot of buying and selling in her funds, but individual investors should be looking at where the company will be years from now. Tesla looks to be well positioned. Its valuation remains high with a trailing 12-month price-to-earnings ratio of around 60. But if Tesla continues to grow production and net income at these levels, those long-term investors who follow Cathie Wood's lead and buy at current price levels would seem to be making a good investment. Make sure to subscribe to this channel for more Tesla stock content.